Let's bring up a Galloway summary of this transaction. Mr. Galloway, a few days ago, told us he was plus on this deal. Mr. Bukis and TWX are the opposite of Yahoo, who they are being compared to, selling at the high, cable and structural decline. Great management, what shareholders want from their fiduciaries. I love this. Time was classic Galloway. Time Warner, George Clooney. Yahoo, George Costanza. I mean, that says it all. What does this mean for AT&T if they're paying that Bukis premium?
Well, this feels like a bet the ranch strategy. If Yahoo doesn't work out, it's a rounding error for Verizon and people forget about it. AT&T really is, we're betting on content. We're going for something that's very aggressive, that has a decent chance of regulator pushback. But this is a game-changing transaction.
Yeah, I agree with you, and it changes the game theory and strategy of the business. A pro like you, how do they react this morning at Disney? How does Mr. Malone react more in distribution? What do you think there?
You know, the company I thought that could potentially try and come in and top it, and all of a sudden over the weekend is doing a lot of navel gazing. I'm curious to get your thoughts around this, is Apple. Apple has the cash to come in with a significantly. They could screw up this deal. They could come in and try and top it with the cash position they have.
Do they have board backing at a Google or Apple to make the kind of history that Professor Galloway is talking about?
I'm sure that they may, or I don't analyze individual stocks, but the credit market is open enough for it where you could do a cash. They have enough cash.
No credit involved, right?
Again, I don't want to pretend to be an expert as you are in it, but again, this kind of wave of M&A is going to continue as long as private equity is attracting money, as long as the credit markets are fully open. There is this race to try and find growth through the credit market and through acquisitions.
Please, in London, Anna.
Yeah, Scott, I wanted to, you mentioned Apple. I mean, have we seen the full extent of Silicon Valley's interest in content? I'm guessing from what you said there, no. But where do we end up here with the relationship between content and Silicon Valley?
Yeah, I don't think you've seen the end of it. Effectively, there's now a couple of companies in Silicon Valley, maybe Apple even one of them, that are running up against the same issue that AT&T and Verizon are running up against, and that is they've run out of growth. The same ceiling around the saturation of mobile phones affects Apple as much as it affects AT&T and Verizon. In addition, you have cheaper capital coming out of Silicon Valley, so they can come in and be a little bit more promiscuous with some of their purchase prices. So I don't think the Valley, absolutely, the Valley has the biggest guns in town in terms of acquisitions. And also you have probably the most important content company with the most momentum in the world right now is a Silicon Valley company called Netflix. Millennials watched more Netflix than all of cable combined. So when we talk about content, we are talking about the Valley.
Scott,
well, essentially, you mentioned Netflix, and I mean, this is a company that decided not to go out and buy an old media creator and to create their own, or at least to create enough of it to encourage millennials to sign up to their service. Are you surprised then that AT&T has made this choice to spend quite so much in buying this content?
This is what I would refer to as the first millennial merger, and that is millennials want to watch stuff, differentiated content that's not ad-supported on their phone. This is the first time that millennials have forced this type of transaction.
Tony, question for Professor Galloway.
Scott, you've mentioned Apple a couple of times. What is, if they don't come in over the top on this deal, what do you think that they might do?
By Disney? I mean, come on, Disney. It's a no-brainer.
Disney, but what's Disney at now? What's the market cap at Disney?
It's just below. Bring it up here. Bring up the chart we've got up here right now, Scott. We used this chart this morning. AT&T in blue, Time Warner in white. And if you normalize Disney, Scott, back to the Lehman low, that red line is right where Disney is right now. So they're trading at a roughly equivalent price change from the Lehman low off of Time Warner, where a transaction could be had for an equivalency, that white circle.
Do you think that would happen?
Wow, I'll tell you, that would really be that would be dramatic. There is some history there, though, with Pixar and Jobs.